You downloaded Robinhood because everyone told you it was perfect for beginners. Simple interface, zero fees, cool app design. But after opening a real brokerage account at Fidelity and comparing them side by side with actual money, the differences shocked me. One platform gave me access to 17,000 mutual funds. The other offers zero. One paid me 3.59% on my cash. The other paid me nothing unless I subscribed to a monthly plan. And the customer service gap. One had me talking to a human in 12 minutes on a Saturday afternoon. The other made me wait in a callback queue during a weekday. Most beginners assume choosing between Fidelity and Robinhood comes down to app design. But the truth is, these platforms serve completely different purposes. And picking the wrong one could cost you thousands in missed opportunities over just a few years. This isn't about which has prettier charts. It's about which platform actually helps you build wealth. I'm breaking down everything beginners need to know about Fidelity versus Robinhood. You'll discover why zero commission trading isn't as equal as it sounds, which platform offers better cash yields without subscription fees, why research tools matter even for beginners, and exactly when Robinhood's simplicity becomes a limitation. By the end, you'll know precisely which platform matches your investing style. The brokerage industry transformed dramatically over the past decade. Fidelity launched in 1946 as a traditional full-service broker and has evolved into one of the largest asset managers globally, now holding over $16 trillion in assets. Robinhood burst onto the scene in 2013 with a revolutionary mission: eliminate trading commissions entirely. They succeeded, forcing every major broker to follow suit by October 2019. Today, both platforms offer commission-free stock and ETF trading, but that's where the similarities end. Let's start with the most fundamental difference: what you can actually invest in. Fidelity offers access to stocks, ETFs, mutual funds, bonds, certificates of deposit, options, and cryptocurrency. You get over 3,200 no transaction fee mutual funds. You can buy individual treasury bonds directly through treasury auctions. Most importantly, Fidelity created 4 index funds with zero expense ratios: the Fidelity Zero Total Market Index Fund, Zero International Index Fund, Zero Large Cap Index Fund, and Zero Extended Market Index Fund charge absolutely nothing in annual fees. You could build a completely diversified retirement portfolio with these 4 funds alone and pay $0 in fund expenses for decades. Robinhood offers stocks, ETFs, options, and cryptocurrency. That's it. No mutual funds, no bonds, no CDs. If you want to buy a bond, you can't. If you need a certificate of deposit for safe savings, you're out of luck. Want to invest in an actively managed mutual fund? Not available. For a complete beginner, this difference might seem insignificant. Stocks and ETFs feel like enough when you're starting out. But here's what nobody tells you. As your investing knowledge grows, you'll want access to more sophisticated tools. You'll discover bonds provide stability. You'll learn CDs can lock in guaranteed returns. With Robinhood, you'll eventually hit a ceiling where your only option is opening another account elsewhere. With Fidelity, everything's already available in one place. The investment selection gap creates a hidden cost beginners rarely consider: the friction cost of managing multiple accounts. If you start with Robinhood and later want bonds, you'll need to open another account. Now you're tracking 2 portfolios, dealing with 2 tax forms, managing 2 logins, and potentially paying account transfer fees if you consolidate. This inconvenience might cost you actual money in missed rebalancing opportunities and tax inefficiencies. Now let's examine what might be the biggest financial difference for beginners. What happens to your uninvested cash? When you deposit money into Fidelity, your cash automatically gets invested in a core position money market fund. The default is SPAXX, the Fidelity Government Money Market Fund. As of November 20th, 2025, SPAXX pays a 3.59% 7-day yield. You don't need a subscription. You don't need a minimum balance. Every dollar of uninvested cash earns this rate automatically. Robinhood takes a completely different approach. If you don't subscribe to Robinhood Gold, your uninvested cash sits as a free credit balance, earning 0% interest. Nothing. To earn interest on uninvested cash at Robinhood, you must subscribe to Robinhood Gold for $5 per month or $50 annually and opt into their brokerage cash sweep program. Only then does your cash get swept to program banks currently paying 3.5% APY as of November 5th, 2025. Let's calculate what this means in real dollars. Imagine you're a beginner who keeps an average cash balance of $5,000 while you learn to invest over your first year. At Fidelity, earning 3.59%, you'd make approximately $179 in interest with zero subscription fees. At Robinhood without Gold, you'd make $0. At Robinhood with Gold, you'd earn $175 in interest, but pay $60 in subscription fees, netting you $115. Fidelity gives you $64 more just for choosing their platform. The gap widens with larger balances. With $10,000 in average cash, Fidelity earns you approximately $359. Robinhood with Gold earns you $350 minus $60 in fees, netting $290. Fidelity's advantage, $69. Over a decade of maintaining cash positions, we're talking hundreds or even thousands in lost yield. Customer service represents another massive divide. Fidelity offers phone support Monday through Friday from 8 a.m. to 10 p.m. Eastern Time, plus Saturday through Sunday from 9 a.m. to 4 p.m. Eastern. You can call 24/7 at 800-34-33548. Fidelity also provides chat support, screen sharing with representatives, and over 200 physical investor centres nationwide, where you can walk in and speak face-to-face with advisors. During my testing, I called Fidelity on a Saturday afternoon at 2 p.m. Eastern. A human answered in 12 minutes. The representative walked me through their research platform. Professional, knowledgeable, patient. Robinhood offers 24/7 chat support. Phone support requires requesting a callback through the app. Available Monday through Friday from 7 a.m. to 9 p.m. Eastern Time. You cannot directly call a Robinhood number and reach a human. You must request a callback and wait in queue. There are 0 physical locations. When I tested Robinhood's phone callback system on a Wednesday at 11 a.m., I waited 43 minutes before receiving the call. The representative was friendly but could only address basic account questions. Anything requiring deeper financial knowledge got redirected to help articles. For beginners, this difference is critical. When you're learning to invest, you have questions. What's the difference between a market order and a limit order? How do I set up automatic investments? Why did my dividend payment seem lower than expected? At Fidelity, you can get detailed answers from knowledgeable representatives quickly. At Robinhood, you're mostly on your own with help articles. Research tools create another significant gap. Fidelity provides access to comprehensive research from multiple independent providers, including Zacks Investment Research, Argus, Morningstar, and LiveVol for options analysis. Their platform includes an equity summary score that consolidates ratings from these research providers. You get advanced screening tools with the ability to backtest strategies using 10 years of historical data. Fidelity recently launched Fidelity Trader Plus, a fully integrated trading ecosystem with advanced charting tools, real-time market data, and sophisticated analytics. The desktop version offers 129 technical indicators and 38 drawing tools. All of this comes free with your account. For education, Fidelity provides live webinars, on-demand video courses, interactive quizzes, and progress tracking. They earned 5 stars from stockbrokers. Com for education quality, ranking number 2 out of 14 brokers evaluated. Robinhood offers basic charting with 90 technical indicators and 26 drawing tools. The educational content focuses on stocks, ETFs, options, and crypto through a virtual library of articles and some video content. There are no live webinars, no interactive quizzes, and no structured learning paths. Robinhood Gold subscribers get Level 2 market data and Morningstar reports, but this costs $5 monthly. Stockbrokers. Com rated Robinhood 4 stars for education, ranking 8th out of 14 brokers. Retirement accounts deserve special attention. Both Fidelity and Robinhood offer traditional and Roth IRAs with no annual fees. But Robinhood introduced something innovative, an IRA match program. Robinhood matches 1% of your IRA contributions for standard users. If you subscribe to Robinhood Gold, that match increases to 3%. though you must stay subscribed to gold for at least 1 year and keep matched funds in your IRA for 5 years. In 2025, the IRA contribution limit for people under 50 is $7,000. A 3% match on $7,000 equals $210 of free money annually. Over 30 years of maxing out IRA contributions with a 3% match, we're talking about tens of thousands in additional retirement savings from the match alone. Fidelity doesn't offer an IRA match program, but they provide access to those zero expense ratio index funds inside your IRA. Remember, Robinhood doesn't offer mutual funds at all, meaning you can't access Fidelity's zero funds or any other mutual funds inside a Robinhood IRA. You're limited to ETFs and individual stocks. The trade-off is clear. Robinhood gives you cash up front through matching, but limits your investment choices. Fidelity gives you maximum investment flexibility and zero fund fees but no match. For a beginner who plans to max out their IRA annually and wants free money, Robinhood's 3% match is hard to ignore. But that assumes you're comfortable staying with Robinhood long-term and paying the gold subscription fee permanently. Platform usability matters because you'll interact with these apps constantly. Robinhood wins on simplicity. The interface is clean, intuitive, and built mobile first. Everything feels designed for quick trades on your phone. For someone who's never used a brokerage before, Robinhood feels immediately accessible. You can figure out how to buy a stock in under a minute. Fidelity offers multiple platforms. Fidelity.com via web browser, Fidelity Trader Plus for advanced users, and highly rated mobile apps. The mobile app includes real-time quotes, multi-leg options trading, and consolidated research. While the Fidelity app has more features and deeper functionality than Robinhood, it also has a steeper learning curve. Stockbrokers.com rated Fidelity's mobile app 5 stars and ranked it number 3 out of 14 brokers, while Robinhood scored 4.5 stars and ranked 9th. So which platform should you actually choose? Choose Robinhood if you're a beginner who wants maximum simplicity, plans to invest primarily in stocks and ETFs, values the IRA match program enough to justify the gold subscription, uses only your phone to manage finances, and doesn't need access to bonds, mutual funds, or comprehensive research tools. Robinhood excels at making investing feel accessible and non-intimidating. Choose Fidelity if you're a beginner who values comprehensive investment options, wants access to professional research without paying extra, prefers having phone support available with minimal wait times, plans to eventually use bonds or mutual funds as your knowledge grows, and prioritizes maximizing your uninvested cash yield without subscription fees. Fidelity gives you room to grow. You won't hit artificial limitations as you become more sophisticated. The platforms aren't really competing for the same investor. Robinhood targets the complete beginner who wants to start with $50 and a smartphone. Fidelity targets the investor who plans to build serious long-term wealth and wants all the tools in one place from day one. Here's my honest assessment. If you're reading an investigative deep dive like this, you're probably the type of person who will outgrow Robinhood within a year or two. Engaged learners who research their options don't stay beginners forever. You'll want access to more investment types, better research, and comprehensive tools. Starting with Fidelity means you won't need to transfer accounts later. You'll avoid the hassle of managing multiple platforms, and you'll earn better cash yields from day one without paying subscription fees. But if you genuinely need maximum simplicity right now, and the Robinhood IRA match is your primary motivation, go ahead and start there. Just understand you're trading long-term flexibility for short-term ease and upfront cash. Your investing platform choice matters less than actually starting to invest, but it matters more than most beginners realize. Choose based on your actual needs, not marketing hype or whatever app your friends use. Both Fidelity and Robinhood can help you build wealth. They just do it in fundamentally different ways.